This is Andrew Stotz of Stotz Investment Research, talking about our product called Watching the Street. This is where we look at analysts' consensus, and today I'm looking at China. Let's first start off by looking at consensus recommendations and see what's going on. And here we can see that analysts have turned more optimistic on China after having the weakest recommendations in Asia from 2014 to 2015, the last 2 years. Now we can see it has moved to neutral. One company, if we're looking at companies with the most positive recommendations, on the top of that list is Chongqing, manufactures aluminum parts used in telecom devices, automobile, and aerospace, and has yet to live up to its strong recommendation as share price is down about 25% year to date. Now let's look at companies with the most negative recommendations. There's a lot of them there, but let's focus in on Sinopec Oilfield Service, which has among the most negative recommendations, even though analysts have started to turn positive on polyester-related business. Now let's move on to consensus earnings estimates, and let's see what we can find here. The first thing is that the red bar is the consensus estimate, and the red line and the bluish bar. What is that? That's aqua? Not sure. But that bluish bar shows the actual earnings growth. And as you can see, and this is what I worked on in one of my academic papers, was that analysts' forecasts are always optimistic. And we can see that their optimism went from 20 to 16 to 14 to 9 to 7. So, wow. If that's optimistic, then we can see that growth in China is going to be down for the year. So, earnings estimates have been on a downtrend. Guangxi also, there's one company, we're talking about the companies that have the highest consensus EPS growth estimates right here. And some of them are massive. Of course, they may be coming from a very, very low base. This company, Guangxi Pharmaceutical Company, is among the highest consensus target price expected return. Even though the share price has recovered in second half, it's still down about 15%. But analysts are most positive there. And if we look at the lowest consensus EPS growth estimates, we can again see Sinopec Oilfield Services. And right now, it has the lowest EPS growth estimates as well as among the most negative recommendations, which is unchanged from August 2016. And finally, let's move on to the consensus target price. What do we see? We can see that the amount of upside that analysts forecast, well, they forecasted an upside in 2012 of 26, and then of 7 in 2013, and then of 17 in 2014, and then of minus 18 in 2015, and then positive 13 in 2016, and the 12 months forward. So we can see that it's slightly down compared to the prior period. It can partially be explained by Chinese shares on average trading at higher prices right now. Jiuli manufactures one of the companies. This is the highest consensus target price expected return companies. The top one, Jiuli, manufactures steel pipes and tubes. The share price has yet to live up to its expectations as it has remained flat for the past 3 months. Now let's look at companies with the lowest consensus target price expected return. And we again see Sinopec Oilfield Services is also found among the stocks with the lowest target price expected return. Want more of our research? Well, sign up for our free newsletter at becomeabetterinvestor.net/join, and I'll see you there.